Hello, folks. This is ICT 2022 model. This is what 2022 model requires you to do. Once the London session AM is trading into the New York session. So what you are required to do is to mark out the London session for the Eastern time. The London session starts 3 a.m. at midnight, and obviously the New York session starts at 8:30 a.m. That's UTC minus 4. All right. Depending on your time zone, you can reset your chart to this particular time. All you have to do is click here, and then you can select the time. New York. This is New York time. All right. When you want to trade in New York, or you can just, if you know the time, your time zone, right, that's okay. So this is the beginning of the London session, and this is the beginning of the New York session, 8:30. So this is what you are required to do. You mark here and you mark here. Then you get the high of the London session and you get the low of the London session. So you can see that this is the low, all right, because the New York session immediately started from here, all right, the beginning of the New York session. Yeah. So and you get the high. But these lows, this low and this low, they are relatively equal. We call them relative equal lows, right? So you can put this here. This looking like a liquidity sweep though. But that's by the way. Now, what happened was that this was as a result of PPI. Once there was PPI, this guy traded down, but didn't trade into this FVG. This FVG, by the way, is from this time frame. Looking at it, all right. So it didn't trade into the FVG, but just kind of grabbed liquidity a bit and went up. All right, and went up. This is the hourly FVG. This is hourly FVG. So price actually tapped into it. If you check the 1 hour time frame. So if you look at this place, you see the bottom of this particular candle and the high of this one. You see the gap. So this 1 hour FVG. All right. So let's go back to the 1 minute, 3 minutes rather. You can see how it tapped into it. I said it doesn't really have to trade into it that much. What price it was that price tapped into it, drops down a bit. All right. This didn't give entry. All right. According to our entry model, eventually traded above again and traded even above this first high that was caused by PPI. All right, traded even above it and they struggled around here and dropped. Now, when this price dropped, it didn't give you FVG in this time frame, even in the 1 minute time frame for you to make entry. In the 1 minute time frame, it wasn't so clear. Something I'm going to be showing you. So you can see that it wasn't really that clear. You couldn't have made any entry in this time frame, except you just have a different kind of understanding, a different way you could probably make entry, maybe because price has tested here, did these rejections. Maybe you could say because price has done all this and there's something like a trend line here, all right? And this is really for people who are already advanced in analyzing charts. So you can see some kind of a trend line here. You'll be like, okay, since price has done this here and there's some sort of bullish weakness, you can see this bullish candle went up hugely, but there was a significant amount of weakness. So you could say because price did all this and you can see the testing and eventually dropped. And you can see price tested the trend line and give it this. Maybe immediately this is given to you, you make your entry here and your SL will be here. That's one way you could make entry at the close of this particular one. And let's see, your entry should be just, and what are you targeting you're possibly targeting, which is like 1 to 2 risks to reward. And you can still target this relative equal low. Why? Because we still have this FVG untouched. Now, as SMC trader or ICT trader, you could also, because you can be switching between different time frames. All right. So this is what is happening here. Now, this is supposed to be a bullish order block, right? And price went bullish and tested it. Price went bullish, all right? Obviously, price traded above this candle, tested it, but then came back and dropped. When this price dropped this way, now there's no imbalance. Normally, you will need imbalance to trade this market. But there's what we call this flip entry model. You could also use the flip entry model even without the imbalance. All right. Where would your pending order be? Just right below this candle, and your SL will be here. All right. Let's see what that will give you as well. Your SL will be here because we have traded. We first traded above here, traded above here. So if your SL is here, anything that will make your SL to get hits, it means that the trade is not going to hold. All right. Now, you know you don't have FBG, so you have to really be careful with your SL. Targeting this low, and you can possibly take some profits around here because you can see this zone. All right. Possibly take some profits around here. So this is giving you almost one to 2 weeks to reward, and here is giving you 1 to 3 weeks to reward, which is a good reward. Now, another way you could enter this trade, which is what I call the single candle mitigation, which is a very powerful way of entry. And that is, what I would always, all right. Now, I had to wait for this candle to form, all right. It's a further confirmation for me. Now, this candle, this particular candle, you can see how price came traded around on top of this zone, tried going up, but dropped, just like the same way this one did. But this did not form single candle mitigation. Now, what single candle mitigation is that you can see this bullish candle there or thereabouts. This other bearish candle traded above it. Let's just look at it very well. It traded above it, more like liquidity sweep. So it's not like we have the first liquidity sweep and second liquidity sweep, which is like a very powerful confirmation. So when this candle traded above it, it's then closed below. It then closed bearish. If it trades above it and then it closes bullish, it's not valid. So it has to trade above it and close bearish. So because once it does that, the next candle must always be bearish candle. Even though there will be a retracement, next candle will always be bearish candle. So that's my own method of entry. So you have here. Now this time around, you do not need to put your SL here anymore because this is your new liquidity area. All right, price has swept through. So your SL will just be right above this particular guy. All right, give it some points above because obviously you have spread issues. And still, your first takeout profit is still around here. You can see that you even have more risk to reward, 2.4 for here. And then here, you're having 1 to 4 risk to reward. So that's it. So if, for example, you've entered trade using the first entry method called the flip, once there was a failure because of this guy, all right, you see that there was a failure here, you could make entry, little amounts. And then when you see this is a further confirmation. All right. Once you have a further confirmation, you make another entry. All right. And that's it. And by so doing, you reduce your risk here. Okay. And that could add up. So that's it. Now, The next thing that happened is that this FVG price traded into it. All right, price traded into it and rejected it. You can see what happened. Rejected it, and we had this bullish move up. All right, and price came back again, tested the zone, and went up. You know how to use smart money entry method, change of character, shift of structure. Then you have switched to 1 minute time frame, and you could see there was a kind of struggle here, but before you see something meaningful was here. Look at how price created this high, came down slightly below here. All right, and you really need to pay attention to see all this stuff. Otherwise, you won't even notice that it was happening. Because I didn't even notice this was happening right around then because I was already done with this side. All right. So if you wanted to take this, that's what you would have done, you know. So immediately price trades above this guy. Then you look for your FVG. Your FVG is now between this, the high of this candle and the low of this candle. All right. Where would your pending order be? You can put your pending order here, all right, and your SL will be here, and you can put your pending order right just above this candle, and your SL will be there, right? Because we have broken this high. And then your first target, because we have already even come up and tested this zone, so there's no more imbalance. So your first target could just be maybe this top or this place. In fact, knowing fully well that price is attracted towards FVG, because if you refine this FVG to 15 minutes, you see that there's a different FVG there. So you could possibly just target the nick of this FVG or just target the high of this place. And that's it. If you check it, that could have been in, let's see, this, because we have relative equal low, I would have been very skeptical with this zone, putting SL here. But you have to take a good risk in case you are taking out and price, rearranges itself. All right. So now this will be the target because we have relative equal highs here. And yeah, 1 to 2.7, almost 1 to 3x reward. So it's not a must you target that place. You can just target, this place. The earlier you get out, the better for you. The low hanging fruit. So that's it for this model. Hope you get it. Bye for now.